Is the Bilt card costing Wells Fargo too much money? The Bilt credit card issued by Wells Fargo is one of the most popular credit cards out there on the US market these days. It allows you to pay rent to any landlord without a processing fee and earn Bilt points on that transaction. In addition to that, you can earn 3 points per dollar on dining, 2 points per dollar on travel, and these categories are doubled on the first of every month. You have to make 5 transactions per month to earn any rewards, but that is easy for most people. These bonus categories make it super popular, but recently the Wall Street Journal came out with an exclusive article on the dark side of the partnership between Wells Fargo and the startup Bilt. The card is costing Wells Fargo as much as $10 million per month. Hey credit warriors, welcome to the show. If you're new here, I upload videos on credit cards and personal finance several times a week. Subscribe so you don't miss out. But let's get into what's going on here with Bilt. So Bilt launched their card in partnership with MasterCard in 2021, issued by Evolve Bank and Trust. But Bilt, founded by Ankur Jain, wanted to go bigger, and thus they later dropped Evolve and partnered with Wells Fargo, the third biggest bank in America by assets, to issue the card. Now, the Wall Street Journal revealed some of the details of the partnership between the two. About 6 months after the credit card was launched, Wells began paying Bilt a fee of about 0.8% of each rent transaction, even though the bank isn't collecting interchange fees from landlords. Wells earns interchange fees every time people use the card to pay for anything but rent and splits those fees with Bilt. Wells also pays Bilt $200 each time a new card account is issued. Such arrangements are often reserved for airline and other established credit card programs. Now, this was the terms of the agreement. So Wells Fargo thought that these fees that they were paying to Bilt for rent payments would be significantly offset by people carrying balances on the card and paying interest. And like other credit cards, Wells Fargo charges pretty high interest rates, up to 29%. In the article, it says that they were hoping for half or even 3/4 of the money charged to the cards to be carried over as a balance and interest paid on it. But according to the Wall Street Journal, who got this information from insiders, that figure is between 15% and 25%. The article even says that many cardholders are paying rent with the card and then paying that off within a few days before their statement even closes. And they're doing that just to get the points, which can then be exchanged for travel bookings through Bilt's travel portal or through a load of transfer partners, which, to be honest, is what we teach on this channel. Let the banks pay for our luxury travel. Wells Fargo also assumed apparently that 65% or more of the spend put on the cards would be non-rent spending that actually generated income through interchange fees. But in reality, the opposite is the case. 65% or more of the spend put on these cards is rent, and the minority, 35% or so, is other types of purchases. And it seems this is getting a bit too much for Wells Fargo, and it's costing the bank $10 million per month. The Wall Street Journal claims Wells Fargo insiders have said that they will not renew the partnership with Bilt when it finishes in 2029. However, Bilt have hit back. In a statement to Forbes, they claim, as with all new card launches, it takes multiple years for the initial launch to pay off, and while we are in the early stages of our partnership, we look forward to continuing to work together to deliver a great value for our customers and make sure it's a win for both Bilt and Wells Fargo. And I have to say, I think I probably agree with them. They really are still just in the early stages of this partnership. Go and advertise your Bilt card to some more, how should we say, subprime customers, and you'll get the interest revenue you are looking for. Right now, according to the CEO of Bilt, who posted on X, the average credit score of a Bilt card member is 760. That is the score you would need to get the best interest rates on any loan, because people with scores that high always pay on time. Often they even pay early, so they don't pay interest on their credit cards. And in the CEO's tweet, he also points out that they are only 18 months into the partnership. Okay, the Bilt launched in 2021, but that was with a different bank. They then later switched to Wells Fargo. We're only 18 months in. Many cards make losses for the first few years. Just look at the launch of the Chase Sapphire Reserve in 2016. It lost Chase around $400 million. And the CEO, Jamie Dimon, was even famous for saying at the time that he wished it would have have lost them even more, since that would mean that more cards were in circulation, which would eventually make Chase money, whether that was through carrying balances on the card or upsells to other Chase products like mortgages. Wells Fargo also hopes to market their mortgages to Bilt cardholders as well, since if they're renting right now, it means they will probably buy a home in the future. Problem is, mortgage applications are at their lowest level since the 90s right now because of the current 7+% interest rate. So that isn't a viable income stream at the moment and can only be something for the future when interest rates come down. But they do have until 2029. Mortgage rates are most likely to come down in that period of time, and they will also likely think of other ways to make a profit, like marketing the card to people who are more likely to pay interest. In my opinion, the original Wall Street Journal article is probably just scaremongering. Maybe $10 million was their worst ever month, and in a normal month it only cost $5 or $6 million. I think we will see the Bilt card eventually become profitable, maybe with some less generous benefits in the future. It's obvious that they are still in the phase of building the brand and attracting card members with things like really high transfer bonuses to airlines, etc. But you already see certain things being scaled back, like point earning through the dining program, for example. There used to be restaurants for 10 points per dollar, but now they're pretty much all of them are 3 points per dollar. And this is just like what we've seen with any other credit card, like with the Sapphire Reserve. It came out with some great benefits, but they later cut unlimited guest access at Priority Pass, brought that down to just 2. It changed its travel credit to be every card member year instead of every calendar year. Every card member year meant that new card members would get the $300 travel credit twice in the first card member year. Okay, so they get $600. So we may start to see some devaluation from the Bilt card soon, but Bilt insists they and Wells Fargo are all good. In my opinion, it's so early in the partnership that they can go on making a loss for a year or two more as they work to increase card member numbers. But in a few years, they are going to have to pull it back and focus on profitability. And so you may start to see less of the massive rent day bonuses. But no matter what, it is still a strong card and a no-brainer for anyone who rents where they live. If you're interested in the Bilt card, I will put a link to it down in the description below. These are, of course, affiliate links. They help support independent journalism about the US credit card industry here on YouTube, so I do thank you very much if you use them. Please subscribe to the channel if you're new. I'll see you next time. Bye-bye.